This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of Monday, June 6th, 2022. A week that began quiet, but ended with a flourish of news, including the latest inflation data. We expected that to be pretty tough to take, and it certainly was by the time we got to Friday. But knowing it was going to be bad and knowing it was going to be kind of a quiet week, we spent Monday talking about a number of things at TF Metals Report. One of them, a book that I first picked up in 2010 and am currently rereading. It's called When Money Dies, and it's all about the Weimar Republic hyperinflation of the early 1920s. Oh my gosh, the parallels to today are remarkable, as you can see in this little snippet from page 3. It was something we discussed on Monday, June the 6th. But oh my gosh, just read this one page and you wonder about history repeating and rhyming again. This is exactly 100 years ago. Look in the first paragraph where it says it was unimaginable in 1921 and 1922, unimaginable in 1901 that 1922 could hold any more terrors. They came sure enough and were in due course eclipsed, and more than eclipsed, with a turn the following year. So, I mean, how many times have we on this side, or you with your friends, or you're sitting around with your family or whatever and talking about, my God, things are crazy. How could it get any worse? And what was imaginable in 1921, or what that 1922 could hold any more terrors. You could say same thing about 2021 and 2022. You go on to read the second paragraph, and then read the third. Well, I'll read it to you. Because tell me this doesn't sound like the United States or Canada or wherever you live. Undoubtedly, though. Now, again, this was written in 2010. Okay, this wasn't written last week. Undoubtedly, though, inflation aggravated every detail, ruined every chance of national revival or individual success, and eventually produced precisely the conditions in which extremists of right and left could raise the mob against the state, set class against class, race against race, family against family, husband against wife, trade against trade, town against country. It undermined national resolution when simple want or need might have bolstered it. Partly because of its unfairly discriminatory nature, it brought about the worst in everybody, especially the tourist, caused fear and insecurity among those who had already known too much of both. It focused xenophobia. It promoted contempt for government and subversion of law. Is that not today? A little something on Tuesday, June the 7th as well. We, of course, keep an eye on copper. They call it Dr. Copper for a reason. Copper sold off with everything else from mid-April to mid-May, but had been bouncing back and trying to get back above its 50-day moving average. If it could, it would likely foreshadow good things for all commodities, including gold and silver. So that was one of the things we discussed Tuesday, June the 7th. Okay, now, what else are we going to be watching? Oh, Dr. Copper. We're going to watch Dr. Copper tomorrow and the rest of this week, too. Why? Well, again, you can kind of see the same general trend. You go back to September of last year. I could have drawn an arrow on here, but I'll let you see that with your own mind's eye. Wouldn't that arrow right now be up around 485, 90, 95, something like that? Instead, we're down here 10% below that after that wipeout we had in April into May. So is copper recovering? Well, we'll know a lot more in the next 72 hours. Why do I say that? We blasted above the 50-day moving average last Thursday, and then immediately went right back down and below the 50-day on Friday. Yesterday, Monday, 50-day was resistance, and we're still below it today, but look at that candle today. Nice looking green hammer thingy. We could very easily turn around sometime tomorrow, next day, whatever, get back above this 50-day. And that would be nice. It would be like, okay, we're finding support there, successful test of the 50-day support. But then any close above those highs from Thursday and Friday of last week, like in the 460 level, why wouldn't you think then copper's going up to that kind of mean up there around 485, 90, 95 in the next, I don't know, month? And if copper were to rally, start pressing toward 5 again, do you think silver and gold are going to stay where they are? Speaking of silver, something caught our eye on Wednesday, June the 8th. On the shorter term charts over the last, 2-3 weeks, every dip under the 22 level has been bought. Now, 22, if you follow along either at TF Metals Report or on these podcast summaries, 22 is an important level. We've known that for years, literally. And it often acts as either support or resistance. What's interesting now is it's often acting as support. And that was something we discussed, again, Wednesday, June the 8th. And then there's silver. This is at least somewhat interesting to me. I posted this chart earlier. We were talking about how every time silver's been getting below 22, how it's been recovering. Again, this is the last 15 days. All right. Now, 2250 is a cap because, again, that's that kind of breakout level to a slightly higher high off the lows from last month. And you can see that, obviously that's been there 3 times now in the last couple weeks. But 22, the importance of that. Well, look at that dip on the 20th and the 23rd and the 25th and the 26th and at the end of the month into the first of the month. And then 3 days, just the last 3 days. These dips down to around 2185, 2190. And then moving right back up, sharply back above. Some kind of physical thing there, maybe? I don't know. But I know the dips are getting more shallow and the recoveries are coming more quick. So there's at least some potential to be seen in that chart. Thursday brought more generalized selling in just about everything, eerily reminiscent of that period of mid-April to mid-May. Stock market was falling, commodities were crashing, about everything was going down except the dollar. Kind of got out of that here for a couple of weeks, but starting to feel that way again, and man, stonks really took it to the shins on Thursday, June the 9th. Falling below that important 4,100 level on the S&P, looking to indicate more weakness ahead. And of course, more weakness ahead is what will eventually bring Powell pivot number 2. We know that's coming, but on Thursday, June the 9th, we're a little ways away from that, and that's one of the things we discussed that day. Okay, so here's the stock market. We've been following along. Remember, I keep drawing you this line here at 4,100. And that's been pretty valid, going back to the 1st of May when it was support, and then it was resistance, and now it's been support for, 8 days? 7 or 8 days? Well, look what happened. Now, again, this is something, regardless of whether you have mutual funds in your IRA or whatever, we need the stock market to collapse because that's about the only thing that'll force Powell's hand. And as I've written and talked and all this stuff, the last 2 times we've gotten a pivot from the Fed, whether it was December of 18 or the COVID in March of 2020, it was when the S&P had fallen all the way down to its 200-week moving average. That 200-week moving average, you recall, is right at 3,500. That's 15% down from here. And okay, so what else is going on in the world? Well, gold would probably catch it a little bit of a safe haven bid, as would bonds. Maybe the dollar would be spiking, catching its own safe haven bid. But that's what it's going to take. I don't know what to expect tomorrow unless the S&P bookends a red then a green and gets back above 4,100. If it starts dropping, what do we got? A couple of closing lows down there around 3,900. So what if they shit can the S&P 100 points again tomorrow? It's possible. It was really bad this afternoon. It was almost green after lunch, and then it was just straight down. So again, the reaction to the CPI tomorrow is going to be really, really interesting. And on Friday, June 10th, some of the worst U.S. economic data in decades sent gold prices higher, lower, and then higher again, and perhaps ready to close the week actually up. We'll see about that by the time we wrap everything up in a few hours. But let's talk about that data. The U.S. CPI, some of the worst numbers we've seen since 1980. And not only that, real wage growth, inflation-adjusted wages are falling rapidly, unable to keep up. In fact, this month's number, if it were to annualize, would indicate real wages falling 10% over the next year. That is unsustainable and will lead to major societal issues if this continues. Fed thinks they can fix that with just a bunch of rate hikes. The 2-year note yield in the U.S. is now as high as it's been since November of 2018. Following that peak in November 18, the stock market fell about 20% into December, leading to Powell pivot number one. Is that where we're headed again? Maybe that's what gold is sensing as inflation expectations are surging, consumer sentiments in the toilet. We'll see what happens. Stock market's down today, looking to get weaker, and now down nearly 17% year to date. Gold, on the other hand, as you can see in our final chart of the week, is about unchanged on the week, above its 200-day moving average, and actually up more than 1% on the year. So stocks may be down 17, 18%, but gold is slightly higher and doing what it is supposed to do, protect your financial well-being. Please be sure to keep your eye on the markets in the days and weeks ahead. We've got the next Fed meeting next week. It's going to be busy, so please join us at TF Metals Report. We will keep you up to date every single day, ahead of the curve, as we are all out here preparing for what is obviously the end of the Great Keynesian Experiment. Have a great weekend. Look forward to talking to you again next week.